Hello, everybody. Welcome to the technical analysis webinar with AvaTrade. My name is Troy. I'm a senior account manager with the company. I'll be presenting. As we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. I've got enough responses. Thank you. Good afternoon, Grant, Natalie, everybody else. Thank you for joining. Some nice movements today. Technical trading has done very well. Some of the strategies really working. So we'll take a look at what's moving. Maybe we'll take a quick look at the fundamentals first, just to understand why the movements are occurring. But if you're a purely technical trader, you could have been surviving just on technical strategies alone today, as we'll see. Keep in mind, all investments have risk. No one trade is guaranteed to profit. I think we all understand that. The idea is to manage your risk in a way that makes sense for your balance, for your goals, for your risk tolerance, etc. There are different ways to manage risk. Traditional ways like putting a stop loss on your trades to kind of try and cap the losses that could occur. Also, you could use hedge positions, pending orders that maybe trigger in the opposite direction of your primary trade to cover you if things go the wrong way. And also, if you're using our WebTrader platform or the AvaTrade Go mobile app, and we'll take a look at some examples of this, you can use the Ava Protect feature on gold, silver, FX pairings. It's a way for a small premium cost as you're opening a trade to protect against any and all losses that would occur during the protected time period for a small cost. So it's another tool for putting into your trading strategies to help manage risk. So keep that in mind. Now, as we go over things, understand that we're not coming from a financial advisement perspective. It's not to be taken as financial advisement, but more from an educational perspective, so that as we go over some ideas and strategies on the charts, it should hopefully add to your knowledge base and improve upon your ability to find good entry points and exit points for trade opportunities. Frances, yeah, all of the recordings are on our YouTube channel, so you could just go to YouTube, keyword search on the top, AvaTrade channel. You'll find our channel, and there's a section for all of the recorded webinars by language. So you'd want to find the English page, and you'll find all of the webinars recorded, including today's webinar. And you could talk to your account manager if you want a link that takes you directly to that section on YouTube. I know if you're in my portfolio of clients, the signature on my email has that link that takes you directly to the recorded webinars. Now, what is technical analysis? We won't spend too much time on these basics, but I know there are some new traders that join the webinars, as well as some experienced traders. So we'll just run through real quick in about a 2-minute time. What is technical analysis? Basically, it is looking at the historical movements on the charts, the price movements, which are usually represented by what we call candlesticks, and looking for patterns, looking for repetition, looking for predictable breakthroughs that have happened in the past, and many times that can help you to predict what might happen in the future. So, you know, what happened in the past is no guarantee to repeat itself in the future, but many times it does. And many times at predictable locations on the chart, you get predictable movements. So that's where technical analysis comes into play. Yeah, and there's also good analysis. Declan is pointing out our chief market analyst, Naeem Aslam. You'll find his recordings as well. And he actually does, I believe, a daily briefing each morning, a 2-3 minute briefing about just kind of headlights as to what to look for in the day. And so those can be very helpful to help guide you as you get going. And it's not that you couldn't go find that information, but it saves you time to have someone who already does that full time as a job find the important information and point it out to you right from the beginning. So now there are a couple different ways to do technical analysis. There's manual methods, which we will do today. By manual, I mean drawing your own price levels, drawing your own lines on the chart, finding the trends, seeing them yourself, and identifying where you'd like to get in or out of trades. Okay, that's manual technical analysis. And the other way is to use indicators, which sometimes on occasion we'll do. Sometimes I'll throw the Fibonacci levels or something on the charts and see if the indicator agrees with our own manual technical analysis, and usually it does. Okay, indicators I find more limited because they're not smart enough to know what's happening fundamentally in the news. And so an indicator usually is right half the time and wrong half the time. But if you know which half to trust because you pay attention to the fundamentals as well, then the indicators can really be helpful. And so I don't advocate using only indicators to guide you, but they certainly can be part of your strategy. So let's take a look then at first the fundamental news that's occurring today. And by the way, our WebTrader platform is a great way to look at the fundamental news and the technical analysis. Before we get on the MT4 account, we'll take a look at our WebTrader. You also, I mentioned the AvaProtect feature. If you go to our website, point at trading platforms, go to AvaTrade Go. Some of you, the website might look a little different if you're in Canada or different areas around the world because we have different regulations, but pretty much all the features are the same. If we look at AvaTrade Go, it's our own custom-made app, and it's got things that help you manage risk, like AvaProtect I mentioned. You pick the trade size, the duration of time that you want to be protected against losses, and it gives you a premium cost, okay? And the premium is a fraction of what the potential profit could be. And if it bombs and goes the wrong way, you only lose the premium during that time period. Good to hear, Declan, that you're using some of the articles. Okay, so what we're looking at with the AvaTrade Go app is not just the AvaProtect feature on gold, silver, FX pairings for helping to manage risk, but if you use the take profit or the stop loss, those of you who have used the MT4 platform or MT5, you know that the stop loss and take profit entries on those platforms, they don't calculate for you your potential risk to your stop loss or your potential profit to your take profit. Our app and the WebTrader, they do calculate those for you. And I'll show you on the WebTrader, if we were filling this in for take profit or stop loss, how it works. So if you don't have the mobile app, it trades right over top of the MT4 and MT5 accounts, and it really helps with the risk management as you're setting up your trades, okay? And other useful features are on that app. Now, if we log in from up here, we go to this platform. And if you don't see this platform when you log in from our main website, ask your account manager to add the platform, okay? It's there pretty much on new accounts now by default, but some older accounts might not have the WebTrader platform initiated. And so if you don't see this when you log in from our main website, ask for it. Okay, so this is the WebTrader platform. If you trade here, just like with our mobile app, you'll see the trades on your MT4 account if you log in on the MT4 login. It's the same account, just a different user interface. And so you can expand the chart. You can drag it up with this slider, or you can expand it to full screen. You can add indicators, all kinds of stuff with the charts. Very nice. What I really want to show you, though, is let's say we're trading on gold. Maybe I want to buy on gold. And I bring up the order. I can say, okay, I want 10 ounces. Maybe I want to trade 0.1 lot. And I think, okay, 10 ounces is a good trade size. And then I come down and I say, okay, I got a signal maybe from someone, or I looked at the chart and I decided I want my stop loss to be down at 17.99. Maybe I think 1800 is the support level and I don't think it'll break below. So maybe I say, okay, 17.99 is my stop loss. And then I look, you see it calculated my possible loss to my stop loss immediately. My risk is 155 converted to my account currency, $156. Why did it change? Because the entry price is changing by the second, right? Based on the price I would get in when I buy, the distance to my stop loss to this price, this is how much I'm risking. And I might look and say, wow, wait a minute, that's a higher percentage than I wanted to risk on my account. It's more than, X percent. So maybe I know on 2,000 balance, I only want to risk 200 or 100 or 50, whatever the case may be. And I see here the risk is 156. So I say, okay, I only want to risk 100. So then I lower the trade size. And as I'm lowering it, it adjusts. And now I can see, okay, now I'm risking 93. Okay, that sounds good. Maybe that's what I wanted to do coming into it. So it's acting as a trade calculator, taking my trade size, telling me how much margin is required right here, telling me what I'm risking to my stop loss as I adjust it. And if I do a take profit, same thing. Maybe I know I want to try and take profit at 1850. There's a resistance level up there. And I say, oh, wow, okay, I'm risking 92 and my potential profit's 213. That's better than 2-to-1 ratio. Maybe that's what I want. And then boom, I buy. Okay. Or I say, you know what? I don't want to risk to a stop loss. I'm going to use AvaProtect starting out. So maybe I say, okay, this is a 1-day move. I want this movement to occur within 1 day. Look, $56 premium cost. It could drop $100 per ounce the wrong way. And I still, as long as that occurs during the covered time period, when the time period of coverage ends at this exact day and time, any negative floating would be added back to my account and the trade can keep running. I would only be down the premium at that point. Okay. So very useful feature. The potential profit here in this example, 211, the premium cost 56, and then I can just let it run for a day or 2 days. Look, it's only 66 for 2 days. It didn't go up that much. I doubled the length of coverage. For 2 days, I could sit and wait and see if I can make my $210, and I don't have to worry about it hitting my stop loss and cutting me out early, then going the right way. Okay, so very useful features. H. Hassan, what's your question? You're asking about articles. I saw your question. I was just in the middle of presenting a function, so I'll get to your question. Please be patient. And so that's how the order window works. You're asking what articles. This is a technical analysis webinar, but I do want to show you the fundamental articles that are available on a live account. On a live account, you have Trading Central, which is a premium service. It's available on all live accounts. The economic calendar shows on even demo accounts. These features, because they cost AvaTrade money as a premium service, we don't charge our clients anything for it, but we only have it on the live accounts. And so if you click on Market Buzz, look at this, Hassan, H. Hassan. Here are the articles. The ones with the biggest bubbles have the most buzz right now. Okay. Yeah, you pay with the AvaProtect, Peter. The premium is paid up front. The premium is paid up front. So if we look, Amazon has a lot of buzz right now. You click on it. Here's all the fundamental articles right here. Okay. Hassan, give me an okay if you see it. And so you can click on the article and bring it up. Takes you to the website. There's an article talking about something related to Amazon. Okay, Black Friday. Why does Black Friday have anything to do with Amazon? They're an online retailer, right? So wouldn't that help maybe add some bullish momentum to Amazon? So you've got all kinds of fundamental news articles about each asset that's listed in all of these bubbles. And the biggest bubbles have the most trading and activity and talk going on about them. Microsoft, Tesla, etc. Okay, 110 articles on Tesla. The ones at the top are the most recent. Hassan, you need to fix your screen on your side. I did a systems check when we started, and everyone saw the screen okay. All right, so please check on your side regarding your screen and the articles that I'm showing you. Good question. The question is, if you use AvaProtect, is the stop loss needed? Understand that AvaProtect, the maximum is like 2 days, 3 days protection. So as you get near that expiration time, take a look at the trade, see what's going on, and you might want to add a stop loss for when the protection ends. Maybe it's already way up in profit and your stop loss is in profit that you're going to add to preserve profit, or maybe it's way down at a loss and when the protection ends, it gives you that big payment for the negative floating. Now maybe you want to put a stop loss somewhere below that and hopefully it goes back up, but then you're protected. Good question. All right, so other features, if we want to look at the technical analysis in Trading Central, take a look at the analyst views. Very good. And since this is a technical analysis webinar, this is a bit more pertinent. You can pick the asset that you want, listed over here, and you see the technical breakdown. It's showing you there's a support level down here. By support, it means the price hit and went back up, right? Now it looks like it's expected to break out in the downward movement and go towards this price. So it tells you the preference is under pressure, the upside, what the RSI and MACD are showing, etc. It gives you price levels, a complete technical breakdown of the asset. It's like your own live signals here, updated regularly through the day. So very nice for technical breakdown of different assets as well. Why are assets dropping against the Canadian of late? Oil's up, right? Oil went up. That's great for the Canadian dollar. It tends to strengthen because it's their #1 GDP producer in Canada. So as oil goes up, Canadian dollar tends to strengthen, which might pull down USD Canadian, Euro Canadian, etc. And it may have already done that. Okay, so let's then take a look. Fundamentally, what's happening? World shares close to all-time highs. Holiday in the US. Okay, we knew that. The shares went up, momentum reached all-time highs. European stocks largely flat. New German restrictions eyed. So it sounds like the momentum that was on the markets driving up the equities has slowed. Okay, seems like it's slowed down a bit. And as we look at the headlines, Disney increases planned layoffs. 32,000 layoffs coming as the virus hits theme parks. That's not good news. Sounds like the momentum has died and maybe there's some fear kicking back in as you see headlines about 32,000 people being laid off because of the virus. Okay, that doesn't promote optimism, headlines like that. Bitcoin plummets to a 10-day low. That's something different. I put that in here because I think it's maybe an opportunity to look at, technically speaking. We'll take a look at that. And Bitcoin in general is viewed maybe somewhat as a safe haven, like gold, because it's countryless. There's no one economy that affects Bitcoin. It's something that you can invest into if you want to get away from jobs numbers and jobs reports that could affect investments. Bitcoin is countryless. It's decentralized. And so it's something we could look at as potential safe haven type move. And that's pretty much it for the fundamentals. Let's get into the technicals on the charts. We'll jump on my demo here. You guys could look on your live accounts. We're looking at the live movements here. This is gold. And so gold looks like a roller coaster on the one-day candles, going down more than up. But it looks like we've reached on the one-day candles. Declan, you're saying you've had success with using the WebTrader support from Trading Central. Good. I'm glad to hear that. The red and blue lines, I'm not sure what you're referring to. You'll have to expand on that. The red and blue lines where? If you're talking about support and resistance lines, yes. So let's take a look. This area here, if you see, was resistance and support. This little zone right here, okay, on the one-day candles. It was stuck here. This is way back in July. The price of gold was stuck on the one-day candles and then broke above there, went rushing up, and since then worked its way back down. And right in this zone, right where it was a sticking point, you see that's where gold is right now, right in that little zone, gray area zone. So it looks like an opportunity that if gold breaks up this way, you could have a run up at least to the next resistance level here. This level was old support, 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 breakthrough. So if this comes back up, it could reach this level without reaching any major resistance first. That's up around 1850. Okay. If gold breaks below this level here, boy, you could see the potential for further drop with gold. Okay. So pending orders down here, sell stop pending orders could make sense down below 1789, 1790. For the time being, it looks like gold is trying maybe to break back into this zone up here and work potentially its way back towards this resistance around 1850. Okay. Now, based on, good question, Declan. Yeah, gold prices are linked to the economy for sure. Gold is a countryless asset, viewed as typically a safe haven asset. So if those headlines we looked at looks like the positive sentiment is slowed, the positive momentum is slowed on the markets, and maybe some negative sentiment is kicking in right now because of virus spread fears, then what you could say is maybe I take an opportunity to buy on gold. Where would my stop loss be? It would be back below the bottom of this zone. So 1788. I would only get out if it dropped below this little indecision zone. If it hits down here, I give up on my buy. And my take profit is up here at the first resistance. So my stop loss then is 18, let's say 89 or 88. And my take profit is, I'm sorry, 17, not 18, 1788. And my take profit is 1850. Okay. And trade size, okay, quarter of a lot. I've got a demo balance with 105,000, so I could do a larger trade even. You take the trade that's right for your balance. You want to calculate your exposure. If I have 0.25, that's 25 ounces. My stop loss is programmed here to be from the current price about $25 down. So $25 to my stop loss times 25 ounces would calculate my exposure on that. So let's say I'm buying on gold and I'm saying I don't think it'll drop below this little zone of uncertainty from July. I think it's more likely to bounce back up to the first resistance level than it is to break through this zone and hit my stop loss down here. Okay, so I've got this little support area that once it went above there back in July, it has not broken below that zone. And now it entered the zone and it's trying to climb out. So because the fundamentals show there could be some fear hitting the markets again, perhaps we see another bounce back up with gold. Now, obviously, there's no guarantee. So you take a trade size, the number of ounces that make sense, times the distance to your stop loss in dollars, that gives you your risk. And my potential profit is about double that, maybe even a little more than double that, because I'm going up almost almost $40 an ounce to my take profit. Okay, so that's the setup there. Any questions so far? The technical analysis on this, we've got a support level right here. Once it broke through, this old resistance should be support. It's just above that level right now. So we're taking a shot at a buy to the next resistance, going with what we think the fundamentals might be, okay? And limited risk on the stop loss. Now, if you believe the opposite, obviously you can sell, right? I'm not here to tell you you should buy on gold. It's just a simulation. It's an example of how to take the fundamental news and the technical analysis and find an entry point that makes sense based on the price levels and have a spot that you put your stop loss that makes sense based on the price levels here that were an area of support now that was resistance. And so you have your stop loss just below that. It's an opportunistic entry point. Okay. Yeah, MACD, RSI, those indicators are nice. And it depends what settings you have on it and what candles you're looking at, right? Right now, it might tell you gold is oversold and that it should climb. If you're looking at, I don't know, 4-hour candles. If you're looking at 5-minute candles, it might tell you gold's overbought, right? So you have to know how to use those indicators as well, but they can be very helpful. Okay, so that's one example. How about oil? And if anyone has an asset they want to look at, let me know. We're going to look at crude oil and we're going to look at Bitcoin next. So here's crude oil climbing. What has that done for the Canadian dollar, do you think? Probably strengthening it, right? So let's look at 4-hour candles, 1-hour candles. You see the momentum has kind of died off a little on oil, okay? It capped itself here after a strong climb. And so we might anticipate what could happen next with oil. If we go to 1-day candles, and I look back, let me zoom out a little. You see this old gap on oil. This is when the market crashed on oil back at the beginning of the pandemic, and there was a price war between Russia and the OPEC nations with upping production, even when there was an oversupply of oil, which really drove the price down, and the pandemic then hit and also drove it down to near zero, okay? Which is an amazing thing to think of. It cost more to store the oil than it was worth. And so it actually, on some futures contracts, oil went into the negative. They were willing to pay you to take the oil because it cost them more to hold it than they got selling it. In any event, oil obviously has recovered quite a bit. It went back through this gap. Okay, we can draw those lines. This was the top of the gap here. And we talked about trading the gap strategy last webinar, and oil was down here. And for anyone who attended the last webinar, we said it's above the top of the gap, which means there's no new resistance until it gets up here. Okay, this is the next resistance level on the 1-day candles, and up it went, right? And that was a nice climb. So that was an easy move from earlier in the week to be bullish on oil with all the positive momentum we had in the news. And also it was above the top of the gap, which means it broke the resistance here, means it had free reign. And actually I could move this line up and say the resistance is up here. This is what we pointed out, up around 48. So it's got some room to climb before it reaches the next resistance level. And let me just talk a little bit about why is this price level the next resistance level on oil? Well, look at the candles back here. You see, this went up, it was a bullish candle back here. It hit this price, and at this price level is where we got to plunge down. Okay, so the big plunge in oil actually started up here. Then it gapped over the weekend and continued to plunge. Okay, so this was Monday, Tuesday, Wednesday, Thursday, Friday. Weekend gap, dropped more. So here is a resistance level where it hit back here and then dropped. And so if we follow that line over, here's our movement. Once it broke above the top of this gap, it ran up. And we were saying earlier in the week that we thought it could get near 48 before it would pull back too hard. Okay, it got close. It got to 46. Okay, you could take profit now if you had bought from down here. You could take profit. It still has the ability to climb more before it hits this resistance level. That's the bigger picture on oil. Now let's look at the micro picture. The micro picture is on 30-minute candles, oil pulled back and hit a nice support level. Okay, support, it hit and went up here. It came down, bounced, and went up again. So you could take a shot at oil heading back up to this resistance level. This would be a scalp move, right? To buy, take profit up here. Or if you think the news is more negative now, right? We looked, there's some fear hitting the markets about the virus. You could say, okay, I don't want to buy now. The momentum seems to be negative today. So maybe I say, okay, I'm not going to buy. I'm going to put a sell stop pending order here. If oil breaks below this support level, then it could likely drop to the next support level. So if it breaks 44, if it hits 44.5, that could be a spot to sell. What kind of pending order, and this is how you set up a pending order, crude oil, pending order. What kind of pending order out of these four sells from a lower point? If I'm waiting for momentum enough to break this support level before I sell, confirmation of a downtrend would be it breaks this support level, would be a sell stop, correct? So sell stop sells from a lower point. And by the way, in the WebTrader, you don't have to pick sell stop. You just tell it sell from this price, and it makes it a sell stop automatically. So you don't have to be as technical with the WebTrader platform and the AvaTrade Go app. It knows what kind of pending order it is. If you're telling it to sell from a lower price, it'll make it a sell stop automatically. Okay. But on the MT4, you need to tell it sell stop. Then you put your price. If it hits 44.5, it'll sell now. Maybe I want 250 barrels, so I put 0.25. One full lot on oil is 1,000 barrels. It tells you here. So a quarter of a lot is 250 barrels. Obviously, you would do a trade size that makes sense for you. My stop loss then, if it triggers a sell here by breaking through that support, you would expect momentum to carry. If it goes back above that level, your stop loss maybe should be up here somewhere, 44.9 maybe. So stop loss 44.9, and my take profit just before the next support level 43.8 perhaps, give or take. This is more of an art than a science. You could have different exact numbers. Okay, there's my pending order. So now it's ready. I don't have to guess the market this way. I'm using my technical analysis. Okay, the fundamentals tell me oil might push down now, at least temporarily, right? So now I say, but there's an uptrend. There's a support level right here and it bounced. Why would I sell in an uptrend right from above a support level that it just bounced off of? So to me, that doesn't make sense. So technically, it might make more sense to wait and see if it comes down and breaks this support level and goes below it. Then your sell stop sells. So you're willing in this example to give up some of the price to sell from a lower price for the benefit of having confirmation that, hey, it's a downtrend now. It's a sustained downtrend that broke a support level, then you sell, right? So if you wanted to sell from where it is now, by all means you could, or you could certainly buy because it did bounce off the support level. But if I was going to buy in a market that I see fear in the market, which usually drives oil down, if I was going to buy on oil, I probably would have bought from the support level. I would have bought closer to this support level and you'd already be in profit. Okay. What kind of pending order could we put to sell if oil reaches this resistance? If this does come up here, wow, that's an opportunistic spot to sell if you expect oil to drop, right? So maybe it does go up to that resistance level. What kind of pending order can I put up here to sell on oil if it reaches it? Which I'll set up now. This will guarantee that I'll sell on oil. It's either going to break the support or it's going to go up and test this resistance. One or the other will happen. So this will guarantee that I will sell on oil. Sell limit. Exactly. Sell limit sells from a higher price. Sell stop sells from a lower price. So we have our sell stop program to sell if it breaks the support level. If it comes up to the resistance, we sell from the resistance. And so that at price maybe 45.9 or 45.8. Okay, just before the resistance, it sells. If we sell from here and it's going to drop, we expect it won't break this resistance. So if it hits up here at 46.4, then maybe we say, we were wrong, right? We take the loss, a limited loss. So 46.4 on the stop loss on this example for a sell limit. And the take profit then would be back down at this support level, would be around 45. Okay, and place. Okay, so now I'm in. I've surrounded oil with 2 pending orders, guaranteeing that I will trade either from this resistance level, and maybe I want this a little higher. Let me slide that up just a little bit. Perfect. I want to get in closer to this resistance up here. And then my stop loss on that, I'll slide back down a little. Perfect. So now my risk is about half or a third. Okay, there's my stop loss. The only way I give up on this sell from this height is if it breaks this resistance and hits my stop loss beyond this resistance point here. Otherwise, I stay with it and hope to take my profit just before the first support level if it comes up here. If it comes down and breaks here, then I'm in on a sell after the support level breaks. So I'm either going to sell from up here or down here in this example. Type OK if you're with me on the technicals on that, why we have the stop loss where we did, the take profit. It's based on those price levels of resistance and support. Or if you have any questions about that, now would be a good time. Okay, and if we look at the 1-day candles, you can see maybe oil is due for a pullback. Look how oil's been on a bull run. Look at these 1-day candles. Up, 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 up. It's gone up from what, 33 to 46 in just a few weeks time. Okay, that's a huge percent climb, 33 to 46. It's like 30-something% gain in the value of oil in a few weeks. Okay, so it very well could pull back. So technically speaking, these are not bad moves to sell from this resistance or to sell if it breaks the support. And fundamentally speaking, we see a little fear in the headlines today. So it could be a decent move to go after some potential profits, obviously with no guarantees. And also, you're allowed to disagree with me. If you think you want to buy on oil, perhaps you could be right. In these examples, though, we only need to be right 1 out of 3 times to break even. We're making 2-3 times the potential profit with these setups compared to what we're risking. And that's the idea of the technical analysis, is to get opportunistic entry points and exit points, and to confirm movements sometimes with those stop orders like the sell stop we looked at. Now, Bitcoin, we've got time. We'll look at Bitcoin, and then maybe we'll call it a day for the webinar. Where's my Bitcoin? I see Ethereum, Ripple, Litecoin. I bet it's up at the top because it's more commonly traded. Let me find it. Here, I'll do a quick symbol search. This is an easy way to find an asset. Right click over the market watch, go to, I'll first do hide all the assets disappear, right? There we are. Only the ones I have charts open on are showing now. Then you right click, go to symbols, and I can, by category, find cryptocurrencies. There's crypto, CFDs. I open it. Here's Bitcoin USD, and I click show. Now there's Bitcoin USD. Now all I have to do is drag it over and load the chart. Perfect. So we see Bitcoin came down. This is a 1 hour candle. Here's our upper resistance. It got darn near 20,000 again in value, which is amazing. Yeah, this webinar is for beginners and for experienced traders. And if you don't understand something, please ask. Okay. If we look, it just got down to 16,000. So the Bitcoin dropped from a high just this week of almost 19,500 to today. It dropped all the way down almost 3,000 points since the high here just yesterday or earlier today. It's really going into yesterday. down to 16,272. And you see it bounced up. This was a predictable spot that it would bounce. Look here. This is an old resistance level right here. Resistance, drop. Then it became support. And here it is. It plunged down. It hit that old resistance, which is a support level, and bounced right back up. Okay. Now look, it's at a resistance level here. You see, this was support, up, support, up. It hit this price, bounced up, this area back up. So now, after it broke below this price and came down, now it's come back up. That old support could act as resistance right now. Okay. So now we zoom in on 15-minute candles. Here's that level that I drew as resistance. So I could say, okay, maybe I take a shot on Bitcoin. I'll do I don't know, 0.05 on Bitcoin and sell. Okay. Now, why did I sell? Because I have a nice resistance level here that we identified on the 4-hour candles. So now I'm going to put my stop loss up here at, let's say, 17,550. Okay, 17,550. And my take profit, maybe halfway down to the low point it hit today, somewhere down here. So 16,750 for my take profit. Just trying not to be too greedy. If it gets halfway down to the low it hit today, we're taking profit with this example. Okay, so take profit is this dotted line. My entry point is the green line here. Okay, and the risk is about half of the potential profit. Risk up here, about half of the potential profit. In the bigger picture, Bitcoin could easily go back up, right? And if Bitcoin goes back up to 20,000, great. And I think it very well could, even in the next, even this week, right? But right now, this is a technical move. This is a technical trade. We see a huge plunge that shows downward momentum. We saw this support level on the 1-day and 4-hour candles. We know exactly why it bounced up from there. And we see exactly why it hesitated to go any higher on the bounce. Right here, this red line we drew, if we look at 4-hour candles, 1 hour, I think, is a better view. We see this was an old support level here, this price line right here. It was a level that the price was hitting and going up, hitting and going up, hitting and going up. Today it broke below that. So when it bounced up, that becomes resistance now. Whatever momentum caused it to break this support area now causes that to be resistance and might push the price back down. Okay, that's the idea. You're not going to be right every time with this, but by finding opportunistic entry points, in this case, a high point in a downtrend, right? We found a high point in a downtrend just below a resistance level to sell from. That's opportunistic. Now our stop loss doesn't have to be far away to be above the resistance. If it breaks through the resistance up, we get out. If it drops, great. We have a great potential profit. Okay, so just some moves, technically speaking, that make sense, that can give you limited risk with a better profit potential. Okay. All right. Now, if we want to look at NASDAQ real quick, look at the resistance here on the 15-minute candles. Look at that resistance. Resistance down, resistance down, resistance down. It looks like something that if fear really is hitting the market today, look at the cliff it could fall off of. Okay, so we see the upward movement. It was like this, right? Like this. And then it rounded off. It became more flat, like that. And now it plateaued sideways. So it's like the upside of a mountain here. It starts to level off the upward momentum. And now it's gone completely flat. And we see the headlines. We understand why that happened, right? So now, how much do you have to risk to sell on this? Not much, right? I pick my trade size, whatever trade size makes sense for you. Okay, maybe I do 0.10 and I sell. Okay, This is a technical move backed by some fundamental idea that maybe there's some fear hitting the market. My stop loss to be above this resistance level here, where it hit and dropped, hit and dropped, hit and dropped, only needs to be up here at about 12,250, 12,230 even. So I can, with limited risk, go in here. I can say, okay, stop loss above the resistance at 12,235, let's say. And my take profit could be down at this support level down here. The first major support level I see, 12,080, let's say. Okay. So there, potential risk about a quarter of my potential profit, or a third. Okay. If this is going to drop, the first support level you see is here. Okay. This was old resistance. It broke through and it became support up, support up, support up. So if there's going to be a reversal, it might make sense to take profit right in this area. Maybe I'll slide that up just a little bit. There's my take profit, right? If it gets to that zone down here, that might be a spot where it might stop dropping because it was a support level here. So if there's a pull down, about 3 times potential profit of what I'm risking. Hey, if I win on 1 out of these 3 moves, I'm probably breaking even, right? If I win 2 out of 3, wow, that's a huge profit. And that's the idea going into it, is you don't expect to win every trade. You're hoping with the right selective entry point and exit points, going with technical analysis that's favorable for you in terms of where you have to put your stop loss and take profit around the support and resistance levels. You're hoping to make a profit, not to say I have a high win percentage, right? You want a profit in the end. It's about making a profit, not about being right 75% of the time necessarily. Okay. All right, any questions before we end things here? And it'll be interesting. I'll let these run until the next webinar, and I'm sure they'll probably close out today or tomorrow, but we'll see how they turn out. We'll take a look in the next webinar. Any questions before we end things? You're welcome, Declan, and everybody else. Okay, Amir, fundamentally about gold, couple things going on. I think there's some fear hitting the markets again that could help drive gold up as a safe haven. We're coming towards the end of the year. There's a typical effect called the January effect, where many times people are looking to profit take with the equities, with the stocks and indices, which tends to put bearish pressure on stocks and indices. And people look for safe havens with that money. And so that helps gold many times in a cyclical manner each year, maybe climb. Okay, obviously there's no guarantee on that. There's a pandemic, so things are a little different this year as well. But that's a general perspective on gold. Fundamentally, it's a safe haven, obviously. And near the end of the year, and when you think there might be fear hitting the markets, that could be a time where there's bullishness on gold. Now, keep in mind, gold hit an all-time high not that long ago. So there's certainly room for gold to pull back. So I would be careful with position sizes, exposure level, and how much balance you have available to get through bumps in the road if you're trading on gold. And you can even find time periods where you can short gold as well, even if in the bigger picture you believe it'll go up. Okay. All right. Thanks everybody for joining. I'm glad everything was up to par for you. Thank you for the nice comments. And we'll take a look at these trades. We'll see out of these 3 which one's profit when we do our webinar next week. Okay. Bye for now.